There's tabs everywhere, there's data everywhere, there's broken links and broken stuff, and nobody really knows how to navigate a file. And unfortunately, a lot of that is because many of us are self-taught when it comes to building spreadsheets, building financial models. And so we ultimately learn the hard way, and we kind of put something together that, works well enough. We always wish it could be better, but it's at least good enough to get through. Does it have error checking? Maybe it does, maybe it doesn't.
Let's dive into the topic at hand, which is building intelligent financial and business models. So, Chris, what would you say the number one secret is to doing just that?
Well, it actually starts with design principles. I don't know about everybody, but a lot of us have probably opened up an Excel sheet and seen that it's just a complete mess. There's tabs everywhere, there's data everywhere, there's broken links and broken stuff, and nobody really knows how to navigate a file. And unfortunately, a lot of that is because many of us are self-taught when it comes to building spreadsheets, building financial models, and so we ultimately learn the hard way, and we kind of put something together that works well enough. We always wish it could be better, but it's at least good enough to get through. Does it have error checking? Maybe it does, maybe it doesn't. What this leads to is basically just poor design throughout. And so a good design structure for a financial model goes back to a fundamental of there's an input engine where you get raw data from like an accounting system. There's a calculation engine where you take that raw data and maybe manipulate it into some kind of forecast. And then there is an output engine, and that's purely just summary information that we're going to be passing along either to ourselves or to our team or something like that. And it's keeping those three engines intact and making sure that they are linking up correctly. And that's the essence of proper design. And if you can master that, then you can build a good financial model and get away from all the junk that is just very, very common to see from the smallest company in the world to even some of the biggest companies.
Okay, so it sounds like the proper design, the proper foundation, and balancing those three things and making sure those are fit, and then building from there. So, Chris, what's the number two secret to building intelligent financial and business models?
It would be keeping it simple. I think there's this need that we have to overcomplicate everything that we model out, and because there's all these line items in the business, and well, we better have a driver for this and a driver for this, and what happens is we end up going back to the same place, clutter and mess. And the truth is most businesses, and just like a lot of things in life, they will follow the 80-20 principle, and there are 20% line items in the company that deliver 80% of the results. And so if you can isolate those and build a meaningful forecast for those pieces, then the rest can typically fall into place. So I think there's this need to overcomplicate for its own sake. And I've built some of those models. I'm not a perfect modeler, and you learn the hard way that it's just too much. And when you get better at it and you focus on just the things that move the needle, then you can have an efficient model that actually is a strategic tool and not some administrative burden that just slows you down every single month.
It makes perfect sense. And by the way, you can learn more about this by going to financialmodelingeducation.com. That's financialmodelingeducation.com. That if you can keep it simple and you can focus on what actually moves the needle at the top 20%, then it hopefully, simplifies and makes it a tool, not just a burden. Is that a fair summary, Chris?
Yeah, and I mean to elaborate or be a little more specific, like if you think about a company, there are basically a few core levers. One is going to be your revenue. You're going to want to have a decent model for your revenue build. And then if you're an inventory company, where you're going to want to have some kind of model for your cost of goods sold so you can get an accurate gross margin. If you're software, you may not need that much for cost of goods sold because it's typically all below the line in OpEx. And then usually the largest expense for most companies is headcount. So you're going to want a meaningfully detailed schedule of all the people at the company. And then from there, it's one or two other line items, and that's kind of most of it. I mean, that's going to be your 80%. If it's a very capital intensive business that has a lot of capital spend, you're going to want a separate budget or module to build out your capital projects. But that, again, there's your 80% right there: revenue, gross profit, headcount, and CapEx. And that's going to give you a directional view, at least on your cash. And that's the ultimate goal of the financial model, is to say, how much cash do we have? And then given these projections, what is our runway? So when I'm building models, that's what I'm focused on. I'm focused on those core things. And then everything else can kind of flow into place with a higher level assumption like inflation or percent of revenue or something like that. And then the details will always self-reveal as needed if you feel like you don't have as much clarity as you need.